Markets end the year with bumper returns. Nifty emerges as a top-performing Asian index with 27% returns. Mid-cap stocks outshine blue chips with a whopping 38% return this year. Media and real estate steal the limelight. No agreement in sight between President Barack Obama and the US Congress as the deadline for fiscal cliff is only hours away. Obama makes a last-ditch effort to save America from slipping to another recession. The flying license of Vijay Mallya's Kingfisher Airlines expires today. The airline will have to submit a fresh funding plan to the aviation regulator and convince all stakeholders for a new license. HDFC Chairman Deepak Parekh believes there is a strong case for the RBI to cut policy rates by 25 basis points in January. He expects the central bank to slash rates by up to 1.5% through the course of the calendar year 2013. Good afternoon and welcome to Business Day. I'm Nisha Poddar, and amidst global volatility, the US fiscal cliff stalemate and political uncertainty in Europe, the Nifty stands out in 2012, surging 27% to become one of Asia's best-performing primary indices. Now, while the last day of the year was a flat, range-bound day, India has outperformed its global peers for the year. Aisha Faridi and Megha Chadha join us for all the action from the Indian equities markets. Good to have you both ladies on the show. Aisha, to take you first then. Take us through the market on the last trading day of the year 2012.
Well, a fabulous trading year comes to a close with a 28% nearly gain coming in for the Nifty and 48% gain coming in for the Nifty Junior. Can't really say that the gains were replicated in today's trading session. Extremely low on volumes, lackluster sideways session, and closed in marginally lower, down about 8 points at 58.99. In fact, we just about circled around the 5900 mark in a very, very narrow trading band for the day. For the day, though, the gainers included the likes of PNB, which held out very well. Apollo Tyres, JSW Energy were your other gainers. And on the flip side, there were losses coming in for Suzlon, which lost about nearly 4% intraday, Gujarat Fluoro, GSPL, Petronet LNG, Tata Communications, Jubilant Foodworks, McLeod Russell, HCL Technologies, as well as GP Power. Extremely low on volumes, and that's pretty much seems to be the case going into tomorrow as well. But let's see how we pan out after a stupendous year coming in for the equity markets. In fact, you had banks, real estate, FMCG, consumer durables, autos, which were all big gainers. For the year, you've had very good gains come in for names like JP Associates, IDFC, as well as Tata Motors. And on the flip side, names like Bharti and Infi, as well as Wipro, have disappointed. But let's see what tomorrow throws up. We will be back with the markets at 8 a.m. tomorrow morning on trading calls. For now, it's back to you in the studio.
That's right, Aisha. We'll be back with markets tomorrow. But right now, Megha Chadha also joins us. Megha, what about the returns for 2012? How have they been?
Well, it was a very quiet close to a year that started off also on a pretty tepid note at that. Remember, at the start of this year, we were trading at a level of closer to 46.40, though, of course, by the time we wrapped up today's session, we had just about managed to cross that 5900 mark. In fact, let's talk about trade for today. Since we are in the midst of the holiday season, the volumes were also very low. But what particular pockets saw a fair bit of traction was the mid-cap and the small-cap side. The benchmark, remember, the Nifty was trading in a range of just about 25 odd points. However, we had fair bit of buying coming into the realty index as well as the PSU banking lot. However, on the flip side, the FMCG as well as capital goods name came under some bit of pressure. And amongst the frontliners, we had a Punjab National Bank as well as DLF that led the gaining side. Both of them ended the day with gains of close to 3% or more. On the losing side, well, we had a TCS, an IDFC as well as an HCL Tech where we lost about close to 1%. And in the broader markets, a Hindustan Copper, a GMDC showed fair bit of traction. So some of the metal names were really shining. However, on the other side, we had a Suzlon as well as a Piramal. That one lost about 3% odd. quite a few names hitting fresh highs as well. So the likes of an MRF as well as the Shree Cement had a good run. And remember, for the year gone by, we've added on a good 27% for the Nifty. In fact, an IDFC, a JP Associates as well as a Tata Motors have been amongst the biggest movers so far in 2012. However, an Infosys as well as a Bharti and a Gas Authority of India have lost out anywhere between 7% to about 16% odd. And for the broader markets as well, it's been a very good run. So we've had the CNX Midcap Index that's added on a good 39%. Strides, Arcolabs, United Breweries stand out from this particular pocket on the gaining side. On the losing side, however, we've got an Opto Circuits as well as an IGL, which have lost about 30% apiece. And even talking about the year, then we had the Small Cap Index also that did fairly well, and the banking lot also added on a good 56%.
All right, so that was it, and Nifty really giving 27% returns for the year. Thanks Megha Chadha and Aisha Faridi for all the details. Thanks ladies for joining in. Now let's also hear out some of the market experts and their investment ideas at this point.
You are going to see a sort of reduction in interest rates over 2013. You could argue whether that will be 50 basis points, 100 basis points, but it's somewhere in that sort of range. And as interest rates come off, you have obvious winners which include the financial sector, which include auto, real estate.
I honestly feel there could be some earnings upgrades coming in 2013, and therefore earnings could possibly help the markets perform relatively better as compared to the global markets. There is an interesting opportunity for long-term investors in Indian IT companies right now.
All right, let's go on to commodities then. How have the commodities performed for the year 2012? And our in-house expert Manisha Gupta joins in with all the details. Manisha, good to have you on the show. Which were the losers and gainers in the commodity space for the year?
Well, mostly you have had gainers, but not as much as the equity markets have performed in 2012. But we've had our share as well. Starting with gold then, and 12th straight year of gains coming in for that commodity. Gold prices are up nearly 7% for 2012. The outperformance, though, coming in from silver with 7.5% of gains. But the gainer really has been platinum with 8% of gains coming in for 2012 for that commodity. There is uncertainty as we speak ahead of the US budget talks announcement. Markets really are expecting on that one. Good gains is what you have seen in case of the base metal prices as well. While copper and aluminum have gained between 3 to 5%, there have been good gains for zinc and lead this year between 13 to 15%, but outperformance clearly coming in from nickel, or rather tin, 21% of gains coming in for that one. The underperformance really has come in from nickel, down nearly 12% for 2012. And as far as the energy space go, you have seen a huge disparity coming in for that one. The NYMEX crude prices are down 8.5% for 2012, while the Brent crude prices have gained 3.5%, and this is the 4th straight year of gains coming in for that one. While the crude has done okay for itself, you have to look at the energy products on how they have performed. If you look at the natural gas prices, that has gained nearly 17% on the MCX this time around. Ditto is the case with gasoline as well. Good 7% of gains coming in for that one as well. And if you look at the market talks happening, energy and silver is something that's top picks coming in for 2013 now.
All right, energy and silver are the top picks for the next year. Thanks, Manisha, for all those details. Let's also get a sense of how the FNO, or the futures and options activity, shaped up for the day. And Navneet Saluja is joining us for all the details. Navneet, given its holiday season, how was really the action on FNO?
Well, Nisha, if you look at the turnover, it was quite low, about close to 49,000 crore on NSE. Well, we really can't blame the markets. Looks like traders are holidaying. And if you look at the January futures closing, that closed at about 59.49 with about 50 points premium, adding 6.4 lakh shares in the open interest. And if you look at the options data, well, there was a lot of put writing today again, because if you look at the Nifty PCI, that inched upwards to 1.01 compared to previous closing of about 0.99. Aggressive put writing was seen for strikes like 5400, which added 6 lakh shares. You also had 5700 and 5800 strike. Both these strikes added close to 5 lakh shares. On the call side, you had 6200 strike, which added the maximum 8.8 lakh shares in today's trading session. Well, if you look at the stock futures, among the Nifty gainers, you had fresh long positions being built up for Punjab National Bank and DLF. Both these counters had a good run up in today's trading session. Alongside that, you also had ACC and GAIL, and short positions were being built up for HCL Technologies and ITC. From the mid-cap space, you had Gujarat Fluorochemical and Petronet Energy, which were down in today's trading session, so fresh short positions were being built up there. Divi's Laboratory, GMR Infra, India Cements, all these counters had a good run-up in today's trading session. Fresh longs were being witnessed for all these three counters, and Suzlon, which was in the ban period for today, witnessed long unwinding as open interest shedding was seen in that counter. In terms of open interest gainers, you had Petronet LNG, Shriram Transport, NHPC and Ambuja Cement, where maximum amount of open interest addition was seen in today's trading session.
All right, Navneet, thanks for all those details. Low turnover there, but markets cannot be blamed. But no holiday for you and me over there. But then moving forward, then it's New Year's tomorrow, and what else is happening tomorrow? I'll tell you about that. Now, Finance Minister P. Chidambaram said that the direct cash transfer scheme will be rolled out in 20 districts from tomorrow onwards. He added that the government will have to move cautiously on direct transfer scheme.
The direct benefit transfer scheme will roll out from tomorrow. But as we said on many occasions in the past, we intend to proceed with a great degree of caution, watching every step so that we don't make any mistake and we don't stumble. We have now identified the 43 districts in which the rollout will begin. This excludes the 8 districts of Gujarat and Himachal Pradesh.
All right, the Kingfisher Airlines officials meet DGCA, or the Civil Aviation Authority, over the weekend to discuss the debt-ridden carrier survival plans. Now, the airline's license expires today, remember, and that's going to be the big news today. And Sumit Chaturvedi joins us in on more details on that. Sumit, what were the key takeaways of this particular meeting, and what are we expecting today?
Kingfisher Airlines is all set to lose its flying license today. The troubled air carrier was given time till today to submit replies to the questions asked by DGCA and Aviation Minister, especially on the financing front. The Kingfisher Airlines CEO Sanjay Agarwal had come to DGCA last week and had submitted a revival plan, according to which Kingfisher Airlines plans to start operations with 7 planes, and rupees 650 crores will be given by UB Group in the beginning. But Aviation Ministry officials and DGCA rejected this revival plan, saying it doesn't talk of financing at all, and there is no commitment from UB Group also on the financing front. But there is a window of opportunity for Kingfisher Airlines. It can come back in 2 years from the day the flying license lapses and can start flying once again. But we doubt any investor would like to come and invest in an airline which has no flying license. The Kingfisher Airlines had started operations in 2005, but since then it has not made a single rupee profit. It has got accumulated losses of around 10,000 crore and debt of around 7,000 crore. So clearly clock is ticking for one king of good time, and with Kingfisher Airlines, the future of its 4,000 employees is also on stake.
All right, so suspended license really terminates today, and Sumit Chaturvedi giving us all the details on that. Now to the banking space, then HDFC Bank cuts base rate by 10 basis points to 9.7%. Now Paresh Suktankar, who's the ED and CFO of the bank, says that the overall reduction in cost of funds will take effect over time.
Factoring in the slight reduction in fixed deposit rates, as well as the CRR reduction we had seen earlier in the quarter, on a cumulative basis, the calculation has thrown up the base rate reducing to 9.7%, and that's what the base rate will be effective today. Our overall reduction in cost of funds would be something which should happen gradually over a period of time, because it's not only for those tenors but across several tenors.
To an ET Now exclusive, then HDFC Chairman Deepak Parekh believes there is a strong case for the RBI to cut policy rates by 25 basis points in the month of January. He expects the central bank to slash rates by up to 1.5% through the course of the calendar year 2013. Parekh also expects large corporates with NBFC arms to bag banking licenses. Here's an exclusive excerpt in a chat with ET Now's Sandeep Gurumurthy.
I'm quite optimistic that in the calendar year 13, we'll see a 100 to 150 basis points drop in interest rates during the year, not immediately in January, maybe at 25 basis points in January. Don't forget, the world over, global central banks are following a very accommodative monetary stance. But the argument they have is we have no inflation, or our inflation is almost nil or marginal. Now, we have followed not an accommodative monetary stance because our inflation is high. But inflation numbers have softened. If you see, inflation have come around 7%. So I think there is reasonable justification for Reserve Bank to modestly drop interest rates in the January season.
The RBI has come under immense criticism from the government and from industry for for stifling growth, as people call. The governors maintain that
it's always a balance.
The governors maintain that inflation had to be tamed, and he did this in the interest of taming inflation. What is your view? Do you think the RBI, in a sense, has stifled growth, or do you think the priority was taming inflation?
RBI's job is inflation. Government's job is growth. So that's where the conflict is, or that's where the disagreement arises. And I think RBI has to tread cautiously.
The year 2012 has seen an unprecedented slump in asset quality. Going into 2013, do you think it's likely to continue, or do you think the worst is behind us?
See, the slump in asset quality is particularly infrastructure assets. And you have to look at the restructured loans of banks. The restructured loans of banks have shot up significantly. It's almost 7.5% to 8%, from 3 to 4%. So they've doubled. Now that does not mean that the entire 8% of the restructured loans of the banking industry put together are bad. You have to assign some percentage of that. You could assign 20-25% of 8%. So 2%. 2% of that may go bad. But if infrastructure gets the start that it deserves, and some of these projects that are halfway complete or halfway incomplete get the green signal and they start constructing, I think some of these problems will go away.
So you think the worst is probably behind us?
The worst is probably behind us. Is behind us, I think.
With the banking amendment bill being cleared by the Parliament, now the central bank is expected to speed up clearances for new banks. What is your view? Do you think large industrial houses should get a banking license?
All large industrial houses have large NBFCs. True. And the NBFCs have been growing rapidly. So obviously there is a desire by some of the large business houses to convert the NBFCs into banks. So I think conversion of NBFCs into banks should be permitted. And again, the government RBI can come out that the promoters cannot hold more than a certain percentage after a period of time or something. So I think we have waited too long for new bank licenses. The policy has, the government wants new banks. Now, so I think the Reserve Bank you will see new bank licenses being given in 2013.
Straight to the international news then. Fiscal cliff talks stalled yesterday as Democrats and the Republicans remained at loggerheads over the deal. Now the talks appear to break down anyway as a deadline drew near and the Senate went home for the night without voting on any fiscal cliff deal. Now the Senate plans to reconvene later today in a last-ditch effort to avoid tax rises on New Year's Day. Here's a report on that.
U.S. President Barack Obama told NBC's Meet the Press that if Congress fails to avert the fiscal cliff, it will impact financial markets.
If, people start seeing that on January 1st, this problem still hasn't been solved, that we haven't seen the kind of deficit reduction that we could have had the Republicans been willing to take the deal that I gave them. If they say that people's taxes have gone up, which means consumer spending is going to be depressed, then obviously that's going to have an adverse reaction in the markets.
Without a deal, $600 billion in tax hikes and federal spending cuts will begin to take effect January 1st.
Good afternoon, everybody.
On Friday, Obama signaled he was cautiously optimistic a deal can get done.
But we don't yet see an agreement, and now the pressure's on Congress to produce.
The Senate's expected to hold a rare Sunday session, and the House is also expected to convene.
And in spite of all the uncertainty over the fiscal cliff, U.S. futures are showing a positive start to the trade today. You can take a look at Dow futures, which is up in the green, 0.18% up, and S&P futures 500 is also up almost 1/4 of a percentage point. Now, European stocks are also trading mixed on the back of fears of the looming fiscal cliff. Investors wary of taking any fresh positions. On your screens, FTSE as well as CAC. Those are the two markets in Europe which are open, and mixed views coming in from there. But of course, nervousness is something that we can see on the screens. Now, the Foreign Investment Promotion Board, or FIPB, today deferred a call on IKEA's proposal to set up cafeterias inside its stores in India. Now, the board wants more clarity from the industry department on products that can be sold in IKEA's Indian stores. Devdatta Das joins in with more details on that. Devdatta, why was the call on IKEA's proposal really deferred today? Can they really expect something positive coming out of it?
You know, this is the second proposal that IKEA has set before the government for approval. The initial one with the investment and the initial plans of Indian operations had been cleared by not only the FIPB but as the cabinet as well. Now, the issue over here is a lot of products that were rejected by the DIPP from being sold in its Indian stores. Not only that, the bigger issue of allowing cafeterias to run within its stores in India. IKEA in its proposal has said that these cafeterias will be crucial to their business operations and business success here in India, as they are globally, and therefore it is mandatory that they have these cafeterias placed within these stores in India once they open it. And that is exactly to deliberate upon it that the FIPB had met today. But there are several details that are awaited on the kinds of products that could be sold, be it furniture, furnishings, and books and toys and gadgets that have been rejected. Also, the beverages and food items that will be sold in the cafeterias, the kind of branding issues that will crop up with it. All of these have to be discussed, details sought from the DIPP, for which the meeting has been deferred. Probably it will be taken up in the next FIPB meeting and then henceforth sent to the cabinet.
All right, Devdatta Das on top of all those developments. Thanks so much for joining in. Now, even though 2012 has been a forgettable year for real estate, like many other sectors, developers are bullish that 2013 could be a turnaround year for the interest rate sensitive sector. While office rentals are expected to go up by 15 to 20%, residential segment could also be priced at a premium. So will 2013 really witness the renewed investor interest in properties? Gauri Dwivedi with this report.
It's been a sluggish year for realty in India, with sluggish interest rates and tepid demand adding to the sector's woes. But the industry is confident that the worst is over. While in the office leasing segment, a strict business vertical, over 23 million square feet was added in 2012. But it is a drop from 26 million square feet in 2011. Ongoing global slowdown was one of the key reasons behind slow leasing of commercial property in major cities of India, as tenants became cautious and held on to expansion plans. But developers hope rental income will increase next year.
Next year, I would say it will be in the range of around 15 to 20%, because both the value upside as well as the demand-supply equation getting balanced will both drive it into a 15 to 20% upside.
Residential space, which saw over 1.6 lakh residential units being launched in 2012, will continue to witness momentum. In fact, developers rule out any price corrections for the coming year.
In terms of pricing, I assume that it's going to be anywhere between 5 to 15% depending on the project and the location. So overall, it's a good year for the developers, as long as they don't overstretch, which was the bogey of the developers in the 2008 and 2010.
With RBI ensuring that no banks fund any land purchases for builders, the sector is relying heavily on expensive debt from investors. Can the reality of fund crunch bite realty is now the big concern. Suchetna Ray and Gauri Dwivedi, ET Now, New Delhi.
And hopes are high as the new year begins tomorrow. With that, it's a wrap on this edition of Business Day. Stay tuned to ET Now.